Well, thank you for having me once again. Traders, welcome back. If you were with me yesterday, and if you weren't with me yesterday, welcome today. I'm coming to you from beautiful, sunny Wellington, Florida here, although you probably can't tell from this room. But I've got a very fascinating, very interesting, very powerful presentation for you today. But I've got to squeeze this presentation into a 30-minute time frame. And if you know just a little bit about me, my speeches, my talks, my educational events, which I hold all over the world, you know it's very difficult for me to contain myself or to express myself within such a short period of time. I'm usually a lot more thorough than that. But I'm going to jump right into what we're going to cover today, guys. I want to talk about how and where to trade in 2020. So I promised in this presentation that I would give you a few sectors to focus on, 5 in particular. I'm actually going to give you 6 sectors to look at, and I'm going to give you specific names that I'm actually playing and actually have been playing for quite some time. So I want to share that with you. But first, I want to do something which I think is actually more valuable than that. I want to first cover specific approaches, specific trading tactics and techniques that I want you to then go to these sectors and these individual names and utilize. It's not just enough to know what to play in or where to play in, but how to play actually is like 85% of the game. So if you get those two matched up appropriately, you can do very well. So we're going to spend a good deal of my 30 minutes that I have with you focused on how to do this, not just where, but specifically how. I'm going to talk technique and strategy. I want you to get your notebooks out. I want you to get your pens out. I want you to take notes as thoroughly as you possibly can. All right. Now, I will have to give you just a tiny bit background about who I am, but I'm going to do this very briefly, a lot more briefly than I did yesterday. Guys, look, I'm a 33-year professional veteran in this industry. I started my professional career in December of 1986. Started my first professional trading firm in 1994. That firm became one of the largest trading organizations in the world. Later, I went on to create another trading organization that sort of revolutionized the trading industry. I was one of the first firms to not only set up an academy worldwide for traders, but I also fund each one of my academy attendees or my traders under training. So they do not have to risk a single penny of their capital ever. They get funded starting anywhere between $50,000 all the way up to millions of dollars. And we put them in business. And I was one of the first firms to really do this on a broad scale. Today, we're over 10,000 traders strong. I have traders in over 43 different countries. And if you haven't heard about who I am with my long 3-decade history in this industry, it's probably due to the fact that over the last several years, I've taken that organization and focused it more on building the trading organization overseas, Latin America, China, Europe, and places like that, India and places like that. So that's actually who I am. I continue to be one of the most sought after speakers in this space on teaching traders how to trade a living. And I continue to be a consultant for many institutional trading firms and have advised some of the largest exchanges in the world. Now, I want to actually skip some of this introductory stuff and let you know very quickly that I am also the author of 5 international best-selling books. My 5 books on traders, they sell collectively more than all of the trading books that have ever been written in the world, basically. And if you're interested in following me on any of the social networks, I want you to look at this slide here. You can find me on YouTube, where I believe we have one of the most valuable YouTube channels, where I spend 365 days a year dedicated to putting out a valuable piece of trading content for you. Instagram, I'm extraordinarily active on, putting out content on a day-to-day basis as well. Okay, let's talk about the business very briefly. The business that I am in and the business that I help put traders in. Guys, look, I put traders through lifelong training. I train them forever. There is no end, or there is no expiration date. Every single one of my traders is trained and educated every single day of their lives forever until they either quit or die, basically. In addition to this, I do provide them funding, but they first have to actually pass the test. What you see on that top line is the training line. They get a practice $50,000. All they have to do is show me their ability to basically accumulate over any period of time $3,000. That's it. Show me that you can net $3,000 based on the tactics and the strategies that I teach you. And once you do that, you've arrived. We go into business together. I turn that $50,000 account into a real account, and we're in business together. Your goal then is to do the same thing, but this time real. You have to take the $50,000 real account, and your first goal is $3,000. Once you achieve that goal, you go to the next level. Now you get 40% of all gains. I get 60%. Now that's the best part, my part. I get 60, you get 40, but remember, you don't ever risk a single penny of your family's capital ever. You don't ever have to put money in. All the losses are mine. If I fail to get you to the place of profitability, I take the loss. All the risk is mine. We do share the gains. I'm generous, but I'm not that stupid. All right. So we're in business together. Then you get I put $100,000 in your account. Then you go for $6,000. Then of course, you get 40%. I get 60% all the way through the levels. And there are levels all the way up to 11. I'm just showing you the first 4 levels. Now, the making $3,000 with $50,000 and making $6,000 with $100,000, that's not the difficult part, traders. The difficult part is that you have to do it responsibly and professionally. So if you look at the daily loss and the weekly loss columns, you have to arrive at that destination without losing more than $300 on any given day or $600 on any given week at the first level. And there are corresponding levels. There are other numbers for the other that correspond with the other levels. Like level 2, you have a $500 maximum loss per day and a $1,000 maximum loss per week. Once you cross those thresholds, for instance, once you lose at level 1 more than $300 on any given day, your keyboard stops working and you can't trade until the very next day. And this is how we as an organization control our risk. We limit the downside of every single trader, but never limit the upside. So traders can flourish on the profitable side all they want to, but if they hit their maximum thresholds, they get eliminated for the day or eliminated for the week if they hit that weekly thing. This is professional institutional trader. We help traders all over the world go into the professional trading business. That is what I do. That is what I've been doing. That is what I've been doing, at least specifically for the last 25 years of my life, more specifically for the last 10 years funding traders. And there you have it. Now, let's delve into the specific trading tools that I want you to have for this year. These are going to be simple. A 12-year-old can understand these tools, but I do not want you to confuse the simplicity for a lack of power. These are powerful, and I'm going to demonstrate that to you today. I'm going to show you how powerful these simple tools are. The first thing we're going to do is need an account. As you already saw, my traders start off with $50,000. Guys, you can't do this with a little bit of money. I'm sorry. I'm sorry. If someone's told you that you can show up to a gunfight with a knife and win, I'm sorry. They're not being truthful. You need money in this industry to make money. You cannot play this game with a little bit of money. A little bit of money actually creates a very, very bad trader because the trader trades with fear and is forced to do actions when the actions aren't required because the money is so small. It is a death sentence. So we start traders off with a minimum of $50,000. If you don't have that, then I'm one of your solutions. I'll give you the $50,000. Okay, we need a daily chart if we're going to play from a longer term perspective, a buy and hold perspective. We need a daily or weekly chart for that. And if we're going to play from I want to make my living type of trading, we're going to need a 2 to 5 minute chart. So there are 2 charts. I don't have it here. The daily chart and the weekly chart for longer term holding. Okay, 2 to 5 minute chart I want to make my living in the markets. These are the two broad categories of time frames. We need a 20-period simple moving average. We need a 200-period simple moving average. As I mentioned yesterday, I have found in 33 years of trading no evidence whatsoever that the sexier varieties of moving averages are any more superior than the simple version. So I keep it simple, stupid. All right, I keep it KISS. Okay, I need the 20, the 200, both simple moving averages, and here's the important thing. I need you to understand my concepts of space, power, and color. Three things we're going to talk about today. We're going to talk about space, which I delved into greatly yesterday, but we're going to briefly talk about space today. We're going to talk about power and color. So there are three games we play in this game. We play the space game, the power game, the color game. Let's go. Now, this is the same chart I used yesterday, but it serves a great purpose. I want you to take a look at this chart. It's a 2-minute chart in this case. We'll look at a variety of different time frames. Every bar represents 2 minutes of trading. The green ones represent 2 minutes to the upside, where over that 2-minute period, the stock, or in this case, the Dow Jones Industrial Average, rose. Okay. The red bars are 2-minute periods in which the Dow declined. Now, I'm going to point certain things out to you. I want you to note the 20-period moving average and its relationship with the 200. I want you to note that the stock is above the 20-period moving average. The 20-period moving average is rising, and it is also above the 200. So these three items are creating what I call the three-finger spread. You've got the top finger is the stock, the middle finger is the 20, the bottom finger is the 200. That's the three-finger position. That's called the picture of power. That is what I teach my traders, to look for pictures of power. Stock on top, 20 in the middle, 200 at the bottom. Now, the 20-period moving average is rising. This is key. I want you to understand this. We'll get to this in just a moment. The 20-period moving average is rising. The 200 does not have to be rising. So in the picture of power, I want the stock to be rising, the 20 to be rising, and I want both of those to be over the 200-period moving average. Now, I also want you to look to the left of the chart and notice that on the left-hand side of the chart, all three of these items are kind of clustered together. And on the far right-hand side of the chart, they're spread apart. This comes to our space concept, all right? Now, I spoke about the space concept very thoroughly yesterday, but I've got to do it a little bit again today. Now, let me get my tools here, my annotation tools, and let's go. So I want you to note that space comes in two forms. There's the single form of space and the dual form of space. Now, notice that there's very little space between the three items on the left-hand side of the chart. All right, this is a narrow state. But on the right-hand side of the chart, there's a great deal of space between the three items. Okay, your best opportunities are going to come when your stock is in the first part of a narrow, no space state before it actually moves to a wide state. When your stock has reached a wide state, when all three items are spread apart, the game is over, or at least close to over. It's usually over. And this is one of the great mistakes many players play. They wait for everything to be obvious to the point where all three items are far apart, and that's when they start their game. That's when they start their buying. It's easy to buy when the three things are spread apart, because that's when all the news is great. That's when everyone's euphoric. That's when everything is positive. That's when you have total proof that everything is good, but you don't have that when all three items are together. Now, there's another aspect of space I want you to understand. The single form of space is when your stock is far from the 20. That's what I call the single form of space. Stock and 20 far apart. Look, stock and 20 apart. Stock and 20 apart. Now, notice together represents some of the best opportunities to jump in. We jump in when the stock is together with the 20-period moving average. We leave when the stock is away from the 20-period moving average. We look to get in near the 20-period moving average. We leave when the stock creates space away from the 20-period moving average. If you can understand this, you can go on to really doing this professionally. I know it sounds like it's a 12-year-old concept, but it's extraordinarily powerful. But you first have to make sure that you are playing the picture of power. Stock above the 20, 20 above the 200, the 20-period moving average is rising. Okay, now, the dual level of space, the dual concept of space is when your stock is far above or below the 20-period moving average, but your 20 is far away from the 200. So now we have this dual layer of space. When you get the dual space, no more buying. Dual space, no more buying. Game is over. In fact, it might be time to think the other way. We play with the flow from a narrow state. We think about playing against the flow from a dual space wide state. I'll repeat that again. We play with the flow from a narrow state. We think about playing against the trend, against the flow from a triple or double wide state. Narrow, wide, narrow, wide. This is the space concept in a nutshell. Simple, but extraordinarily powerful. Let's move on. Okay. Boom. Now, take a look at this chart. Again, I showed this yesterday, but it serves a great purpose here. We're looking at the same scenario down. Notice that your stock, Facebook, is trending down. It is under a declining 20-period moving average. The declining 20-period moving average is under the 200. Now you've got the three-finger spread going to the downside. Stock under, 20-period moving average declining in the middle, and the 200 above. Now notice to the left-hand side of the chart how your space is relatively narrow. Get my annotation tools up here, boom, narrow. The three items are relatively close together. When they're close together, we go with the flow, right? Whichever way the 20-period moving average comes out of that narrow state. If it comes out of the narrow state to the upside, we go that way. If it comes out of the narrow state to the downside, we start playing to the downside. Now, in this case, as you can see, it came out of its narrow state to the downside. Now, we're going to play in the direction of the 20-period moving average, which is to bet to the downside, but we can't do it away from the 20. We have to do it near. So our entry points are near the 20. Our entry points are near. They don't have to be touching. They just can't be separated far apart. Okay, so in this case here, it's not touching, Facebook is not touching the 20, but it doesn't have to touch the 20. It just has to come back near the 20. Remember, moving averages in a way are really like force fields or zones. They're not skinny lines as your platform would have you believe. So it's come back into the zone of the 20-period moving average. Now, I want you to notice that when your stock gets away from the 20, this is a profit-taking move. When it comes back toward the 20, it's an entry opportunity. When it moves away from the 20, it's a profit-taking move. When it comes back toward the 20, it's a entry opportunity. When we move away from the 20, it's a profit-taking move. Now look at this last one. Look at the distance from the low of the move and the 20-period moving average, and look at the distance from the 20-period moving average to the 200. No more playing with the flow. You've got the three-finger spread. You've got the dual layers of space. The game is over. This is a huge mistake made by people. They wait for it to become so obvious that they start playing the game when the three fingers are already spread apart. That's when the game is over. Now, if anything, we want to start playing in the opposite direction once we get the three-finger spread. Okay. Simple, but not easy. All right. Now, I want you to read this as quickly as you can 3 times. 80% of all losses in trading, 80% I can turn you into a profitable trader if I can get you to do this, get you to not do this. 80% of all losses in trading are due to trading against the 20-period moving average. So when the 20-period moving average is rising, you want to try to bet to the downside. When the 20-period moving average is declining, you want to find a buy opportunity. Wrong, wrong, wrong. 80% of your losses will come from trading against that blue line that I have on the charts. Now, let's take a look at this. Here is a chart of Apple. This is actually today's chart. I took this right before we began the presentation today. I want you to look on the left-hand side. Notice that the Apple is rising, the 20-period moving average is rising, and the 20-period moving average is above the 200. Now, notice in the middle of the chart how the space between the 20, the stock, and the 200 gets relatively wide apart. Not relatively, wide apart. This is wide apart. Okay? Notice how in the second third of the chart, they get narrow together again, where the stock, the 20, the stock, the 200, they're not really separated anymore. And now the game starts again to the upside. Notice to the right-hand side of the chart how beautifully the 20-period moving average is rising. This is right now. This is from April into the current market today. Now, I'm going to utilize this chart to talk about the two games that we play, the two entry games that we play. Now, you understand the space game. No space is we start going with the flow, okay? Going with the 20-period moving average, going with the 20-period moving average. When we have wide space, we can actually start playing the opposite way if we like. Now, let's talk about the color game and I'm gonna keep track of my time here. All right, whoa, let's talk about the color game and the power game. Now look, color game is whenever your desired color takes out the opposite color. So in this case, looking at Apple, whenever green removes this red bar by trading above it, boom, that's your entry. Whenever green eliminates the high of a red, boom. Whenever green eliminates the high of a red, boom. Whenever green eliminates a high of a red, boom. But once you start getting lofty, I want you, no more game playing, no more color game. No more color game. In fact, it's the opposite color game. When red starts to eliminate green, boom, play to the downside. When red starts to eliminate green, play to the downside. Once you have the three-finger spread. Now look to the far right-hand side of the chart. We got the 20-period moving average rising. We're coming out of a narrow state. Now play the color game again. Green takes out red. Boom. Green trades above red here. Boom. And so we play the color game in the direction of the 20-period moving average until it gets wide and the game stops. If anything, you start playing the opposite color game. All right. Now, the second game we play, right, in addition to the color game, is we play the power game, the power bar game. So I don't want you to miss these opportunities as well. This is what I would call a power green bar. We want to dive into the power green bar, or at least get in right above the high of the power green bars. So whenever you have power green bars in the direction of the 20, we jump in. Whenever we have the color game entry, we jump in as well. So we're jumping in on two different occasions. Power bar, boom. Color entry, boom. Color entry, boom. And I don't really see any power bars, but notice how Apple is potentially at some point is going to be separated and the game must stop. Okay. All right. Now I've got to go motor speed here. Motor speed, 10%. Now we talked about 80% of your losses come from trading against the 20-period moving average, right? 10%, now it's a 90% of all losses with these two things. 10% of all losses are due to trading with the space, all right? Now, what do I mean by trading with the space? Here's today's chart of NVIDIA, all right? Powerful stock. I've owned it for a long time. I love it. Okay, now, NVIDIA, right? NVIDIA trading with space, this is a huge mistake to buy there because space is to the upside. And this is where a lot more market players than you know will buy there. Do you know why they will buy there? They will buy there because usually that's where good news comes out. Good news has caused it to separate, to create the three-finger spread. It's the good news that has actually separated it. So people buy good news. And good news oftentimes comes at wide separated states to the downside. But this is also a double mistake because not only is it buying the stock far away from the 20, it's buying the stock far away from the 20 and with the 20 far away from the 200. So you've got the dual layers of space against you here. This is a terrible buy. The same way that is a terrible place to sell where I'm pointing to. Why? Look how far from the 20 that is. Now, usually people are selling there because they've held through the entire decline and the pain is so ferocious, so acute that they can't take it anymore. And right at the wrong spot, they're getting out of their play when in fact, this is when you should start thinking about going the other way. You've got the wide separation between your item and the 20-period moving average. Now, let's talk about the exception. When do you go against the 20-period moving average? Well, I've been talking about it. You go against the 20. This is a daily chart of Beyond Meat. I took this today. This is today's action, right? So look at the dual space in Beyond. We've got not only the stock, Beyond Meat, not only is Beyond way below the 20-period moving average, the 20 is way below the 200. So we got the dual levels of space. Now we can think about playing the color game and the power bar game to the upside. So whenever green, let me get my annotation here. Whenever green takes out red, boom. Look at this red bar. Green trades above it here, boom. Green trades above red, boom. Green trades above red here, boom, boom. All right, we get away from the 20, profit take, please. All right, we come back toward the 20, green takes out red, boom. Power bar entry, boom. Green takes out red, boom. We're gonna start getting to a separated state with Beyond, so the game is close to being over, at least temporarily. And there you have it, guys. I want you to take this space concept, the color, the trading with the 20-period moving average concept, the know the exception to trading against the 20-period moving average concept. I want you to know the color. I want you to utilize the color game and the power bar game in the direction with the flow. And I want you to do it with these sectors, guys. Let me show you these sectors here. Cryptocurrencies. I was never a fan. I'm a fan today. All right. You need to take this concept and go to the cryptocurrency markets, Bitcoin and Ethereum in particular. That's number one. Number two, I want you heavily focused on tech, which is the least hurt by pandemics like this, right? So you need the infotechs, Facebook, Apple, Microsoft, Amazon, Google, NVIDIA. All right. You need those infotechs, all right? Facebook, Apple, Microsoft, Google, NVIDIA. If you can't do them through stocks, maybe you can try some options or what have you. Now, retail tech, I like the China retailers. I do. I think that they're ultimately have the best chance of even taking an Amazon out of the game. Not out of the game, but Alibaba and JD.com. I love that space. I love that space. Alibaba, Baba, and JD.com. I love that space. I think that the future is huge with them. All right. Tech remote. We want things like Zoom. We want Zoom. We want Roku. We want Netflix. We want PayPal and Square. All right. I think these things are, for the most part, insulated from a lot of things. There's always your traditional consumer stocks that things, no matter what goes on, people have to buy them. Like, you know, products by Procter and Gamble, PG. You want Costco. You want Dollar General. Look at these things. Look at PG. Look at Costco. Look at Dollar General, and tell me, do their charts look like that there's a pandemic going on? No. Does Nvidia's chart look like a pandemic's going on? No. Apple's? No. Microsoft's? No. They had a little blip, but they're all back to new highs. All right. These things are a Home Depot. All right. These things are fairly insulated. If you take this color game, you take the space game, you take the power bar game, you take the concept of trading with the 20-period moving average until at least you get the 3-finger spread. You get in near the 20, you get out away from the 20, boom. You can take this method and go anywhere. Cryptos, Apple, Microsoft, Nvidia, Baba, JD.com, Costco. It doesn't matter what you trade. This is a universal approach to making sure you trading with the trend, with the power at the right time, and also exiting at the right time. And that's it. Now, look, for those of you who might be interested in my program, if you're looking for funding, if you're looking for training, real professional training every single day of your life, right? You're looking for the proper amount of capital. I believe you shouldn't do it with your capital. It is a statistical proof that traders are better when they don't trade their own capital. All right. What we will be doing in our program is trading off of charts like this that you see here, beyond a 2-minute chart. The same concept works. Look at this. This is from today. Look at the narrow state of beyond to the left. Look at the green taking out red. Look at the power bars. Look at the green. Look at the moves away from the 20. So it's the same concept. And many of our traders, many of our traders today took these plays, green taking out red from a narrow state, move away, profit take, move back toward the 20, get back in, green takes out red, boom, move away, profit take, look at your separation. And then look at how sloppy the stock gets after the 3-finger spread. And this is how they're making their living, using these same concepts, but just on smaller price ranges. Now, look, Self-Start program is my most popular program. Live trading camp is the only 2 things you need. Self-Start, live trading camp. Together, it's $3,000. You can lose $3,000 in a week in a trade. Okay, this is for life with full funding. Now, you don't have to do both. You can just do the Self-Start and get fully funded as well and add the live trading camp later. That's a $1,700 cost, but I'm going to give you a discount for participating in this show so you can get everything for $2,000. Think about this. You're going to get the best education in this industry. You're going to get a 33-year-old veteran teaching you every single day of your life, and you will never have to ever put a single penny of your money at risk. I will take 100% of the losses. It will be my loss if I can't make you profitable, right? We share the gains. But if you don't make it, you'll get one of the best trading educations in this industry. There aren't many people who have 33 years in this industry and that have the accolades and the history that I have. So if you're interested in this and want to do it right, want to do it professionally, okay, you can lose this in a single trade. This is for life. Give me 6 months, give me a year with you, and wow. Traders, I want to thank you for attending. All right. I want to let you know I'll be speaking tomorrow again, I believe, in the early afternoon Eastern time. Try to be there. Thanks. Thank you once again.